and FY25 earnings conference call of Camlin Fine Science Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectation of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. I now hand the conference over to Mr. Ashish Dandekar, Chairman and Managing Director, Camlin Fine Science Limited. Thank you, and over to you, sir.
Thank you. Ladies and gentlemen, welcome to our quarterly call. We are sorry and we apologize for the delay in the call. It was due to technical issues with uploading the results, and I'm sure you'll appreciate that we would like to give you more time to study them. Doing always, Santosh Parab, our CFO, will give you a brief of the quarter and the performance and issues, after which Nirmal Momaya, Managing Director, will be answering your questions along with Santosh. Santosh?
Thanks, Ashish. Good evening, everybody. Thanks for attending our earnings call. As you are aware, the times are quite difficult. General global situation on tariffs and war and all these things has been a very difficult time. Still, we have been able to give fairly good results. I just dive down to the consolidated results. As you would have seen from our disclosures, as you know, we had two units which were not, the business was closed or the manufacturing was stopped in our diphenol unit in Europe and our erstwhile vanillin manufacturing unit in China. These both had stopped 2 years back, and the board has decided to discontinue or abandon this business, and hence, as per the instant accounting guidelines, we have segregated our results into two: one of a core business, or what we call technically as a continuing operations, and a discontinued operations. So the discontinued operations which have been presented in the results pertain to those of two abandoned or closed down units where we feel that the production is economic and viable, and there is a remote chance of reviving those two projects. As you are aware, the adequate provision on both these assets was done in September, and we had impaired the entire value of both the plants in September quarter. So as per the accounting guidelines, this results has been segregated into continued and discontinued, and all the impact also of the earlier quarters has been regrouped and disclosed as per the accounting guidelines. Now, coming to the operating part of the business, we have in the current quarter we have total turnover of 437 crores as against 431 crores in the last quarter, and on an annualized basis we had 1,439 crores, which has now increased to 166 crores. This has been largely, though the prices of all the products have been southbound, but we have been able to hold on to our volumes. In fact, grow in some of the sectors like our blends business, we have grown, and of course the vanillin business is what has started going. It has been steadily ramped up, and as compared to the last year, we had a much better results on vanillin business. So the total growth, what we have seen in revenues on an annual basis, continuing or the core business has grown by almost 15% year on year. We also had an improved EBITDA of core business of around 12.5%. That's around 208 crores as in 25 as compared to 184 crores of the comparable business in the last year. So we have been able to maintain our margin on the core business despite the main products prices have been a bit southbound. We have healthy growth in blends, especially in the North American market, as well as exciting growth in India. And of course, our stabilized business in Mexico have been increasing at a very high pace. Overall, the blends business has grown by around 17 to 18% year on year. So we have reached around 878 crores as compared to 747 crores in the last year. Of course, blends business also includes CFS Vita for the new blend business which we bought in Europe, Belgium, in our first quarter of this year. It's 9 months thing, but it also clicked around 85 crores in this year, and we feel that it will have higher momentum as we go ahead. The main feather in the cap has been aroma. We have continued our momentum of growth in this quarter. The total contribution of revenue from aroma has been around 176 crores in FY25, and this ramp up will come or increase in the subsequent quarters with anti-dumping duty action in US, and you would be aware now that even European Union has levied a preliminary duty of 131, and that will be finalized in next few months, and that augurs well for us because obviously the prices will go up. There has been, of course, the question is that what will be the cash burn on the discontinued business. We are confident that these cash burns will be reducing because we have abandoned the plant, and since we are not going to restart it in a foreseeable future, we'll be reducing substantially this cost. We will be also looking at how to reduce this cost further, and we feel that this cash burn will reduce substantially. Something on the balance sheet, that our equity has increased because we had a successful right issue in Jan 25. We have been able to control the overall debt position. The net debt position has improved from 564 to 492. The things augur well for us. We feel that the growth momentum will continue in the future with stabilization of business, the tariff war and the difficult times, more clarity coming. We can have a better understanding of the future. Thanks so much.
Yes, sir. Should we begin the Q&A session?
Yeah, you can.
Yes, thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rohan Mehta from FECOM Family Office. Please go ahead.
Hello, sir. Thank you so much for the opportunity. Am I audible?
Yes.
Oh, yes, sir, you are.
Okay, perfect. So, firstly, could you share the volume of vanillin exports to the US, specifically for the month of March and April? And secondly, what is your understanding of the recent ADD and CVD duties imposed on Chinese producers? Will these be applicable for a fixed period of 5 years, or is it structured as 3 years with an option to extend by 2 years?
Sharing of specific data to US is not possible because it's very competitor sensitive data. But overall growth has been there. You can see from the volumes, the revenue, amount of revenues which we have disclosed in our investor call. And April certainly not. It's clearly a forward-looking statement. We cannot share that numbers. Maybe we can add on the ADD.
The ADD for typically it's for 5 years.
Okay, perfect. And also on the prices for Europe and USA for vanillin, what is the current difference?
Sorry, what is the current?
What is the difference in vanillin price?
The vanillin price, the difference will be about 20% or so, 20 to 25%, because the ADDs are different between what is in Europe and what is in the US.
So US is higher, I presume.
That's right.
And what is the number for US currently as on date?
No, I mean, I can't give you specific numbers. The range I can tell you is in the range of $15.
In the range of $15. Got it.
Yeah.
Got it. And in terms of your utilization for the vanillin plant, where do you see the capacity utilization, let's say, in the next 2 years?
In the next 2 years, we want to take it up to 100% as the market development gets better. The idea is to take it to 100% in the next 2 years.
Right. And what is it today, sir, as on date?
As on date, we'll be at about 45 to 50%.
45 to 50%. Got it. And lastly, sir, what is the outlook on the blends business going forward? Do you see at what run rate on an EBITDA basis do you see this business at?
Essentially, we should grow that blends business by about 20% going forward in the next 2 to 3 years, and the EBITDA margins will improve in some of the geographies because there's a certain threshold. So the team will be in the high teens, the EBITDA margin.
Okay. And what is it currently as a percentage of revenue? Like what will it be in the next 2 years, the blends business? Given the vanillin capacity utilization, let's say, is at 100%?
So, as we said, we don't know what will be the future prices. You know that our capacity is 6,000 tons, and you can calculate that number. As far as blends is concerned, we are at 878 crores currently. So we're 20% CAGR for next 2 years. That also is numbers can be calculated, and as Nirmal said, these are high teen business, and as they mature, they move towards 20%.
20%. Got it. Lastly, sir, any pricing pressure are you facing on any products at the moment?
Yeah, there's pricing pressure on all products.
Except vanillin.
Except vanillin right now, because in 2 markets, but otherwise there's a lot of pricing pressure coming from competition from China.
Okay. So in terms of vanillin, any inventory destocking issues you're facing?
We didn't get the question. Can you repeat it?
So in the vanillin business, when it comes to the inventory, any destocking issues are you facing? Any pricing pressure, any inventory pressure over there? Since earlier customers, they had built up inventory, I presume.
Yeah. So that will take a few months for the destocking to happen. So that's part of the reason why we said it take more than a year to ramp up to 100%.
Sure, sir. Thank you so much for the clarifications. I'll get back in the queue.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Jatin Sangwan from Burman Capital. Please go ahead.
Thanks for taking my question. One thing I've observed is vanillin sales have not picked up QOQ. Is there any reason for that?
As you know, we have been selling in US, so there's a stock on sea. It's one thing. We also control the sale because we are looking that the prices will increase. So it doesn't matter to wait for a couple of quarters to get a $15 realization than a $12 current realization.
Sure, got it. And you mentioned that vanillin price in US is in the range of 15, so Europe would be around 12. So when will this price reflect in our realization? So what I want to understand is how long is our order cycle?
It starts reflecting in the next few months.
Next few months. And what was the average utilization in Q4FY25 for vanillin?
The average utilization, capacity utilization, we're asking?
No, average realization in Q4FY25 for vanillin. So you reported sales of around 60 crores for vanillin. So what was the average sell price for vanillin in Q4FY25?
Price has been increasing. It's in the range, so it should be in the range of $12 to $13.
Okay, $12 to $13. And also you mentioned that capacity utilization of vanillin is 45 to 50. So was that for Q4 FY25 or Q1 FY26?
Q4 FY25.
And how has been your Q1 doing?
Can't tell you, this is really a forward-looking statement, but I think as I said, that we will be growing. Hello?
Okay, sure. Yeah. So also if I look at your Europe losses and China losses, they have also increased Q and Q. And I wanted to understand if you're reporting 22-23 crores of discontinued losses, what will be the breakup of those losses? How much are related to employees and how much are other fixed expenses? And when will we actually start seeing the reduction in these losses?
So, as you said, because the decision of abandonment was taken, we had to really clean up the plants and other things. So, there are some one-time losses, expenses which we incurred in this quarter. These are not regular. Around 14 crores of that is non-routine. But we will be reducing the employee cost. The employee cost is a major portion in this. Annual employee cost for Europe was 16 crores, which is going to reduce in the next financial year by at least 90%.
Got it. And if I got you right, you are saying that you will only see 8 crore of discontinued losses in Q1 FY26?
Yes, cash burn should not be more than 8 crores. Going forward on employee cost, there could be some fixed cost to be incurred because it's a plant is abandoned, but we are mothballing it. So there could be some janitorial cost and security cost, site cost.
Okay, got it. And also, I mean, we have been discussing this for the last few calls. Your cost of production of vanillin is still $9 or has it moved in either direction?
As we told you that because this average utilization is at 45%, that's the reason why it is high. As we go beyond 70-75% of break even, this should come down to sub 9.
Okay, got it. And also, if I look at your let's say year-on-year expenses, employee expenses have jumped by around 25%. So what has led to this?
One thing is that we added Vitafor in this year, so which was not there in the last corresponding quarter also. That's one thing. Generally, a lot of business is in America, Europe, where the annual salary cycle is calendar year. So generally the costs go up on salary of normal salary rise. And of course we are also bracing up for additional people on sales side as we are anticipating growth. We are anticipating growth in almost all sectors. So we are also bracing up and have sales and technical people on board.
Got it. And if I look at your depreciation expenses, it has jumped up sharply QOQ. But you have not done any capex or anything. So what is driving this?
These are regrouping which happened, and Vitafor also came, which was not there year on year, is the main reason. Vitafor kicking in this year. We also had couple of lease assets. This is an accounting thing. Once you get the full annual balance sheet, you will see that there are certain lease assets. So to save on cash, we rather than going for purchase of assets, we have gone for lease of assets. And as you know, the disclosure is in finance cost and depreciation on this, and that is increased. It will be more clear when we publish our annual accounts.
Sure, got it. That was the last question from my end.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may press star and 1. The next question is from the line of Surya Narayan from Phillip Capital. Please go ahead.
Yeah, thanks for the opportunity, sir. So my first question is on the possible implication of the tariffs, although that is not very clear, but if you can send something, or you would be having communication with your clients, and since you are having also the global operation, so what possible implication that it can throw?
So it's very difficult to answer that question, Surya, because everything keeps moving every day. So
yeah.
Who knows what tariff will come on which product in which country. So it's very, very difficult really to project what will happen. But all we know is that hopefully, at least for India, we should not be worse off than our main competitors, competing countries like China. So in that sense, either it will be on equal grounds or we may have some advantage.
Okay. And generally also, there is a large list of products which are exempted from the tariff and all by US. And many of the kind of food-oriented chemicals, which would be like for us, the straights and all that, the blends also possibly. So that is free from tariffs, and hence there would be no impact. That is the right way to think, or how is it, sir?
Yeah, so some of the straights, yes, that is right. But we don't sell much straights into the US on our antioxidants from India. So really speaking, it doesn't make much of a difference or any significant material difference. Most of our business is supply from other places. So that's how those tariffs, even though there are no tariffs, it's not going to really give us any impact.
Okay. Second question about the blends business. This quarter, generally, QOQ, if I see, then there is a kind of declining trend that we are witnessing. Generally, the perception was that the fourth quarter being the best quarter in terms of the revenue, at least for the company, that is in the trend. Is it not the trend for the blends business? Or there is specific things that has resulted in a quarterly a decline?
The blends business essentially is also, the Q4 is always slightly muted, purely because in some parts of the world where we have substantial business, mostly in Latin and Central America, it's a extended holiday season. The business has come back to work post mid-January. So you're essentially restricted to two months kind of scenario. Then there are some seasonal things also which impact, like fishing season in some parts of the world where we have business, which got delayed. So instead of you seeing business in February and March, you'll see it in April, May, because the fishing seasons got delayed. So there are some climatic conditions which lead to some cyclicality based on not necessarily the time, but on climatic conditions.
Okay. And generally, we have been talking about slightly higher growth, 25% plus for this. Now, obviously, we have seen a very strong base also, hence possibly moderated a bit our guidance of 20%. But on the top of that, if you can give some clarity about how integrated benefit that you are likely to see on the blends business led by your the Vitapur acquisition and the potential acquisition of WinPy and all those contributing. How would that be contributing to this going ahead? If you can give some sense for the next year.
Yeah. So we've not actually considered in the 20% growth WinPy. If we get, once that is completed, I mean, so we probably will end up at the 25% number that we've guided in the past. It's of course subject to when the WinPy closes. But there is very good interest in products from both Vitapur and WinPy across the geographies where we have our own selling and distribution set up. Of course, the other parts of the world, we have distributors which we are expanding relationships with distributors on a global level. So you will see a lot of movement coming from not only the areas that we ourselves are present in, but also other parts of the world. So I think both the lines that we've got, WinPy more, that's more in the food segment, and Vitapur in the animal nutrition segment, both are, I think, very well positioned for growth. Yeah.
Okay. Sir, what is the update in terms of the timeline for the WinPy acquisition, sir? And also, whether WinPy would be more influential to growth compared to Vitapur?
So I think the regulatory procedures, I think the corporate actions and all that required to be done should be completed in the next 2 months, and that should be done by July end. In terms of growth potential, yes, WinPy does have a fantastic great growth potential because of the categories of products that they are in are substantial categories, and with some differentiated technology, it's well positioned to get some market share.
Sure, sir. And just on the gross margin front, although in the second half of FY25 we have seen we at least crossed 50% mark, almost like after 2 years of a gap. So is it purely led by the incremental revenue coming from the aroma and no benefit of, let's say, corrected input prices and the initial sign of rising prices? And happens then where that we can target with the ramp up also that is likely to happen on the vanillin front? What gross margin scenario that we should really anticipate?
So it's, when you look at it, we lose money on catechol. As soon as we convert it to vanillin, there is a swing in gross margin. So that swing in gross margin will continue to happen on one side. On the other side, there are several products where we are seeing a lot of price pressure and a lot of competition, very aggressive competition. So, when you balance it, you kind of say that it will be in the region of 45 to 55%. In that zone, you end up based on product mix, based on how the market is behaving. But that's the region where we are, essentially playing on.
Okay. One more point, just with your permission. See, on the vanillin side, obviously the finalization of the ADD is likely to happen by July. But by now you would be having, in some sense, in terms of the placement, order booking, and all that. And is it practically two players? Apart from Solvay, it is you that is actively pursuing this contract and negotiations and all that with the US parties, or what is the scene and feel about the volume visibility for the subsequent period? If you can provide something on the vanillin side.
Yeah. So essentially in the vanillin business in the US and in Europe now also the anti-dumping duty has been 131% has been proposed, which will get confirmed in the next month or two. Essentially, that kind of gives Solvay and us some advantage. And I suppose we'll get majority of the share of the market between Solvay being the market leader and us being a second player. We will see volumes growing from these two markets in the next 3 to 4 quarters. You'll see the growth coming in.
Any other third player that is likely, sir, in your sense?
At the moment, there is nobody, but we don't know. I mean, if somebody in the anvil, but not that we've heard of.
Okay. Just last point, sir. If you can share some of your investment and capex plan, if any, for next year.
So right now we are not looking at any significant capexes because we need to first also sweat our vanillin plant. So no significant capexes, just maintenance and some odd debottlenecking and that kind of.
Okay, sure. Yeah. Thank you, sir. Wish you all the best.
Thank you.
Thank you. The next question is from the line of Ajit Sanjay from Niras Enterprises. Please go ahead.
Hello. Am I audible, sir?
Yes.
Yes, sir, you are.
Hi, sir. Thanks for the opportunity. And most of my questions have been answered. But one clarification I wanted, sir, about Lockheed Martin business. Do we have any order or any updates on that, sir?
No, nothing on update about Lockheed right now. It's on, they've installed their first battery. They're waiting for some feedback. So,
Okay.
no orders at this point of time.
Any timeline for that or anything sort of that?
No, very difficult to say. It's not really in our hands. It's in the hands of Lockheed. So.
Okay, done, sir. Thank you so much. Thanks.
Thank you. The next question is from the line of Niraj from White Pine Investment. Please go ahead.
Yeah. On the tariff side, can you give some thought process how you see the evolution happening? Do you see the margin compression happening, and how are our products placed on competitiveness? And do you see the margins compressing in non-US areas? So some thoughts on yours should be useful.
This is the question is with respect to vanillin?
No, across non-vanillin, sir. Because vanillin, we are clear that the US and Europe will benefit because of the anti-dumping, and other side the prices may go down. But can you talk about the blend side business, the margins, and how much impact do you see any impact because of the tariff on the competitive pressure in the and seen because of the tariff side? And
no, so tariffs, essentially, I mentioned earlier that very difficult to predict what will happen. At this point of time, we don't see it as a disadvantage or an advantage. The way our view is that the tariffs over a period of time will kind of balance out, and I don't think any country will have significant advantage or disadvantage. So from that perspective, it seems like we should be okay on our margins as far as the blend business is concerned.
Okay. And the second question is the inventory in the US so high that it will take a year for you to scale up the production?
Regarding what? Sorry, I didn't follow you.
The vanillin inventory, you're saying there's inventory in the US because of the pre-buying before the anti-dumping. So is the inventory quite large in the US that you will take a year for scaling up your production of vanillin?
No, it's difficult to say. It's very difficult to say how much stocking has been done. But I mean, we are seeing that it's what we are seeing is that.
So I'll tell you. So see, we can't really estimate what kind of vanillin stocking has happened in US and how much anybody's carrying. But we could certainly see that there is some release of stock, and hence our sales in US are growing. And that's why we are saying that it's just ramping up the production to 100% in the first year itself may be detrimental even to the prices. So we feel that With respect to our capacity, we will be reaching 100% over a period of next 2 years.
Okay. And what is the price of booking vanillin right now? Not in the Q4 numbers. What is the price of booking vanillin right now?
Manufacturing vanillin, right?
No, I'm asking something. What I'm asking is, what is the price that you are doing an agreement to sell that vanillin so that the...
It depends on market to market and customer to customer.
On an average number. Right?
We told you the
range, but we can't give you figures for this quarter. Yeah.
13 to 15 is the range. As we said also that we had around a range of $12 to $13 in the Q4. At present, the range is $13 to $15, which based on the volume, country, how much quantity wants. So it's very specific. So 10 kgs can be sold at $25.
No, I understand that. And the last question, what is your estimate of your 6,000 tons if you reach 100% utilization, say, in 2-3 quarters from now? What is the estimate of that? How much will you be able to sell in the US and the European market?
What is the share of Europe and American market?
They are almost the same size.
Both are same size.
Same size market.
I'm asking what of the total, say, 6,000 tons you produce and sell, say a year from now when you reach 100% utilization, how much do you estimate that combined US and Europe you will be able to sell to them? So what I'm trying to gauge is how much percentage of your sale volumes will come from anti-dumping markets, anti-dumping duty markets?
Our estimate is about 70% should go into those markets. 30% is in other markets.
Oh, great. Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may press star and 1. The next question is from the line of Rohit Nagraj from B&K Securities. Please go ahead.
Thanks for the opportunity. So first question is on blends. So we have grown by almost 18-20% during this year, and we still have confidence that we'll be able to grow beyond 15%. So what is the driving factor for this growth? And from a composition perspective, how the blends are supplied to different geographies, and which geographies are finding this strong growth momentum coming in? Thank you.
I think we are essentially seeing the growth in all the geographies that we are present in, whether it is North America, Central America, or South America, as well as India and Europe. We've also opened some markets for our blends business in the Middle East and Africa, and some of the Asian markets. So the growth is coming from all across.
Right. But
you can also refer to the presentation where Mexican, Brazilian, and North American and the Vitafor Belgium are predominantly blends market.
Right. But then, is it that we are displacing some of the local players, or is it that the industry itself is growing by 15%? I just wanted to have a view on that.
It's a combination of both. Some of it is taking market share, and some of it is growth.
Sure. That's helpful. Second question, in the opening remarks and subsequently you told that for the operations which will be abandoned, we'll be incurring about 8 crores per quarter. How long we'll have to incur it, and whether on a year-on-year basis that 8 crore per quarter can come down materially over the next 2-3 years?
Yes. So the idea is that this 8 crores a quarter is for the next couple of quarters at max, because after the closing procedure is completed in a way which complies with all regulations and safety laws, we will in that locality or in that plant, we will have no employees there, really workers there, apart from a couple which are required statutorily. So the cash burn over a period of time on an annualized basis should not be more than 4 to 5 crores.
So effectively in FY27, it could be about 4-5 crores, nothing beyond that, right?
Yeah, that's right. Even this year, I mean, it will be substantially lower than what we've incurred till now.
Correct. And for the assets there, I mean, is there any value for those assets when we are probably dismantling and selling it?
No, we're not dismantling it. We're not dismantling it. We're just mothballing it for the time being till we find some alternative use if we do.
Right. Fair enough. That's all from my side. Thanks a lot and all the best.
Thank you. The next question is on the line of Ajay Surya from Niveshaay. Please go ahead.
Sir, congratulations on the performance. So my question is, if you can highlight which Indian manufacturers do we actively compete with in the flavors blend segment and the vanillin part? That's my only question.
No, we are in the vanillin part. We don't compete versus anyone in India. It's only the Chinese and Solvay.
And on the flavor blend segment?
Flavor blend? No, we don't have flavor blend in our portfolio.
Just blend, I mean, just the blend.
The blends, there are many competition. In India, there are different competitors. In every market, there are different competitors. There are local competitors. There are some MNC competitors. So we have several lines in the blends, and there are different competitors in different blends. So there'll be a large number.
Any idea on what market share do we hold over there? If you can we put a number to that? Or
it's very difficult to understand. Yeah, very difficult to understand the market share because it's very segmented.
Got it, sir. All the best for future.
Thank you. Ladies and gentlemen, if you wish to ask a question to the management, you may press star and 1 on your telephone keypad. The next question is from the line of Rohan Advant from Prat Capital. Please go ahead.
Yeah, sir, thanks for the opportunity. Sir, on the gross margin range that you said of 45 to 55%, which is a large range, but given the vanillin pickup and the pricing that we are obtaining right now and the benefit it has in terms of reducing catechol losses, etc., from a near-term perspective, shouldn't this margin move more towards 55 than the 45% range?
That's what we are hoping, but let us see how it unfolds.
Yeah, sir, because you said there are some headwinds, but this tailwind of vanillin should overwhelm those headwinds, or am I not understanding it right?
No, as we said, that's why Nirmal said that 55% is the outbound range.
Yeah, that's why the range is between 45 to 55, depending on at what level.
He also mentioned about the product mix. He was hinting towards that more vanillin, higher margin.
Got it. And sir, the current vanillin price of $13 to $15 that you mentioned, it is without the duty in Europe being confirmed as yet. So once that is confirmed, shouldn't this price further go up? Because today there would be some Chinese vanillin finding its way into Europe, and that would be putting pressure on Europe. But once that is out, then there should be more tailwind to the price.
Yeah, that is, of course, like Santosh said, maybe shakkar for you, but yeah. No, it would. So it would essentially, what we understand is there's a 131% duty, and which kind of says that there is room for at least 10-15% of prices to go up in Europe from where they are currently.
Okay. So from a strategy perspective, are you thinking that let's not book too much capacities right now because prices could further go up and we could get locked into a lower rate, and that's why it might take some time for volumes to pick up?
Yeah, there are two things to this. You're right. One is you don't want to sign very large volume commitments. Second is also some of these buyers have already bought lower price material and have stock. So they will also wait it out and negotiate hard till such time as their stock positions become critical. So it's a waiting game, and you're absolutely right with your question.
Sir, just lastly, this confirmation of the European duty, is it just a matter of time, or is there more process that may or may not go in favor of the duty being confirmed?
Well, very difficult to answer that. But what we understand, at least from the market, that the big players are all approaching us for volumes of product and commitments for volume. So which obviously is giving a sign that for sure, and the company which has the biggest injury and is applied for the anti-dumping duty, they seem to be very sure that it's always that these duties will be levied.
Understood. Thank you and all the best.
Thank you. The next question is from the line of Surya Narayan from Phillip Capital. Please go ahead.
Yeah, just one more thing on the branded product that I am seeing, DHA and Omega, the biases products that is visible on your listing. So is there any visible progress that we have witnessed in FY25? And whether it is part of the aroma business or blends business where it is been considered?
It's in the others. It's not put right now in any of the categories. But yeah, we have some very good conversations going on. Of course, FY25, you won't see a massive jump, but there are some projects in the pipeline and some contracts that are being negotiated. If they come to fruition, which we should know in the next 3 to 4 months, then in FY26, you could see a big jump in that.
Okay. And whether the product approval from the advanced market or anything, if any major market that has been already approved or something like that, or it is not required to get any regulatory approval, it is just supply based on the customer approval?
Not regulatory approval is not required. It is more from buyers.
Although it is a DHA and healthcare related product, still it is that way.
Yeah, it is permitted. So all you have to do is most countries permit DHA in food and baby foods and for human consumption as well as for animal consumption. So regulatory is not such a big issue.
Okay. And just one more point. So post the cancellation of the operation there in the Italy. So ultimately, going ahead, whether what run rate that we are quarterly seeing in terms of revenue, so that is a sustainable number, or how should one think, or it is likely to, because there is blends activities that is also there within that premise.
Yes. So at present, blends for the annual blends is in the terms of 50 to 60 crores, and we have moved our focus more to ingredient business in Europe. This will certainly grow. The growth which Newman said in blends from 20%, some portion of that will also come from Italy.
Okay. So that means the quarterly run rate is definitely going to sustain with some growth.
Yes.
Sure. Okay. Yeah. Thank you, sir.
Thank you. The next question is from the line of Rohit Nagraj from B&K Securities. Please go ahead.
Yeah. Thanks for the follow-up. Apologies if you have shared the data probably earlier, but in terms of the 4 segments that we are operating in, what could be a broader range of EBITDA margins for each of the segments?
It's the competitive information. You can see the overall margins in blends. We have been saying a 20% landing year share. So it's very difficult. Other businesses, trades and performance chemicals are very EBITDA margins, so it will be very difficult to exactly give that.
We don't account for that.
Right. Just in terms of maybe subjective assessment of the same, what could be the chronology in terms of high margin to low margin?
We saw 12-10%. That could be said to be a low margin on a composite business. High margins, predominantly blend has always been a very high teen business. Vanillin, it's an opportunity there. It can even have a very high business margin. Generally, we should be near high teens.
Correct. That gives a good idea. Thank you so much, sir.
Thank you. The next question is from the line of Rohan Mehta from FECOM Family Office. Please go ahead.
Thanks for follow-up. So I wanted to understand what is the gross margin for vanillin currently?
We shared the prices, sir. We said that we are producing at 9.5-10 and average price in the range of 12 to 13.
But that's total cost. It's not gross margin, but total cost. Yeah.
But these will be the spreads, right? But the cost of production, which you have mentioned, that includes the other operating costs as well, right?
Yeah.
So I'm asking only on the gross margins, not on the spread.
So at the current phenol prices and crude prices, the raw material cost ranges between $7.5 to $8.
Okay. And what percentage of ortho-vanillin, once you are at full capacity utilization, will it be? Like as a percentage, what will be the percentage of ortho-vanillin at full capacity?
Scientific formula says that we should get 5% of ortho-vanillin on methyl vanillin.
Only on methyl vanillin, not on methyl.
Okay. And in terms of the cost of production for Solvay, would it be somewhere around $17 to $20, or is it much lower?
Always cost of production is very lower than $17 to $20.
70?
It's $17.
No. 17 to 20.
It will be much lower. It will be in the $10 range.
Okay. So this is both for the Europe and US facility.
Yeah.
All right. And would it be like sort of ridiculous or impossible to say that vanillin prices can move up to $20?
Who knows now? Difficult to say about where it goes.
We wish to be able to go to $50.
But yeah, it's difficult to say.
Right. And in terms of the blend, sorry.
It's difficult to really say where it will go and settle.
Right. In terms of the blend business, any 2 to 3 prominent players maybe you can name?
There is Camlin, there is Alltech, there is in animal feed, there are like 20 of them. In antioxidants, it's Camlin. Alltech is in some other products. Then you have Trow Nutrition, you have DSM in some of these businesses. So there would be at least 20-30 companies there. EW Nutrition.
Right.
Yeah.
And while I'm not asking for a specific market per se, but what was the amount of vanillin sold in the last quarter as a whole? Could you give that detail?
You know the vanillin sale. We told you the vanillin sale price. We have given the vanilla aroma ingredients revenue. Can you calculate it?
All right. Thank you so much for the opportunity. Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to the management for their closing comments.
Thank you. Ladies and gentlemen, thank you very much for being with us. We hope we've managed to answer most of your questions, and we look forward to catching up with you again at the next investor call. Until then, have a good evening.
Thank you. On behalf of Camlin Fine Science Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.